If your electricity expense is more than 1 lakh, then also you got to file a return of income. Guys, welcome to class. We are looking at return of income chapter today, also computation of income, also it's a doubt selling session and the rates of tax. A lot is going to happen in this session. Welcome to class. While this is 139.1 which tells us who should file the return, there is also a part which says when should you file your return. After the year ends, take your time, but not too much also, because by 31st July you should file your return. Obviously you can file it earlier, but this is the due date. Sometimes is it extended? Yes, sometimes it is extended, but mostly it is 31st July, which just went by, and this time they did not extend it. If you're someone who's supposed to be auditable, that means you're a big fish, then you need more time to go to a CA, get it audited 31st October. And if you're the biggest fish, then 30th November. So these are 3 people and 3 dates, yes. This 30th November is for international transactions, which we will see at CA final. But here was a small catch. Between partnership firms and partners, there is a link, because whatever interest and whatever salary the partnership firm gets a deduction for, only that much will be taxable in the hands of the partners. So then what happens? Should the partners have wait for the partnership firm? Yes, definitely. And if the partnership happens to be a big fish, then the partners will automatically become a big fish. So basically this is a question that if partners are if you are a partner of a partnership firm who's a big fish, then congratulations, even you get extended time till 31st October. That was the first thing that we did yesterday. The next section, there is no 139.2. I'm very happy whenever the section is not there. But there is a section called 139.3 which says that listen, you have a loss, then please hurry up. The loss return has to be filed within due dates. If you don't file your loss return within due date, then the losses of that year cannot be, it can be set off, but it cannot be carried forward. But what about previous losses? Don't worry, they will be able to carry it forward without any problem. But there are exceptions. That means loss return has to be filed on time. Yes. So people who make losses have to be even more careful about filing their returns on time. But there are exceptions, like if you made a loss from house property, or if you have unabsorbed depreciation. And when I speak of unabsorbed depreciation, I'm also speaking about unabsorbed scientific research and unabsorbed family planning expenditure. Those people are allowed. They are exceptions to the rule of 139.3. Next, guys, in India we always do things late. Our roads were supposed to be made 3 years back, our bridges were supposed to complete 2 years back, and our metro was supposed to start last year, but we are always running late. So can we also file a return late? Yes. There is a section called section 139.4. How do you remember this? Because typically we are almost 4 months late. So there's a shortcut here. Yes, we are typically always 4 months late in filing a return. So can I file my return late? Yes, I can file my return late. How late can I file it? Now, this is the previous year. For your exam, the previous year is 21-22. After that, the assessment year starts in which you need to file your return. Even if your due date is 31st July or 31st October or 30th November, don't worry, you can file it till 31st December. So can I file it late? Yes, you can file it late. So answer is, this is called belated return. It's not called late return, guys. It's called belated return. But belated, of course, you know that there will be some punishment for filing it belated. Otherwise, guys, everyone will file their return belated. So what is the punishment? There are exactly 4 punishments which are given here, which is called LIFT, lift. First, you will have to forgo your losses. You know, guys, you're late. So losses you'll have to say goodbye to, except the 2 losses which are exceptions. Otherwise, losses you will not get. Next, if there is any tax payable, let's say after TDS, after TCS, after advance tax, after paying all of that, still let's say you have to pay 7,000 rupees tax, that tax you'll have to pay. This is just an example. On that tax you will have to pay interest also. Yes, guys, we saw 2 interest sections yesterday called 234C and 234B. Those are on advance tax, but this is on this 7,000 rupees you'll have to pay a tax, you'll have to pay an interest. We'll talk a little more about that. And you have to pay a late fee. Yes, you'll have to pay a late fee. This is the most dreaded aspect, a late fee of 5,000 rupees per return. But the government feels bad because 5,000 is a lot, guys. If you're a family of 5 people, 5 into 5,000 is 25,000 rupees gone. So the government says, don't worry, if your total income is up to 5 lakh rupees only, then this will be only 1,000 rupees late fee. So what are the 4 repercussions? Losses will not be able to be carried forward. Fee of 5,000 or 1,000. Interest if tax is payable. If no tax is payable, no interest. Now let's talk a little about this interest. This interest is basically under a section called 234A. It's a relay race. First 234C runs the race. Then till the return filing due date, 234B runs the race. And after the return filing due date, 234A runs the race. The interest rate is same, 1% for all of them. So after your return filing due date, let's say your due date was 31st July and you filed it today, let's say late today 19th August, then for this whole month of August you'll have to pay 1% on that 7,000. This is section 139.4. Let's do a quick recap on 139.4. Guys, 139.4 is basically a belated return. Yes, you can file it belated. How many months? You can file it till 31st December anytime. Belated return can be filed, but there are repercussions. 4 repercussions. This would be a great question in the exam. Lift. Losses will not be able to carry forward. There will be a fee of 5,000 or 1,000 depending on the total income. If total income is up to 5 lakh, only 1,000 then. You'll have to pay taxes, and not just that, on that tax you will have to pay interest under section 234A. Guys, fee also has a separate section. For the fee, the section is 234F. Very easy to remember because F is for fee, and of course no one likes to pay that fee, guys. This is 234F. Great, guys. One more section down. Now, is it possible that we make some mistakes? Obviously, guys, we are only humans, and as humans, it's our moral responsibility to make mistakes. So let's say you filed your return and you have 5 mistakes. So can you revise it? Yes, there's a section called section 139.5 which says that yes, you can revise it. Indians typically revise it 5 times. Not really, it's only a shortcut. And by when can you revise it? Same, guys, you can revise it anytime till 31st December. So you can revise it anytime till 31st December. Yes. Now, what happens when you revise, and what all can I change? Can I change my house property income, IFOS income? Can I change anything? Yes, guys, you can change anything, can be changed except, guys, the date. The date of original filing will remain the same. That means if I filed my return on time, it will continue to be on time. But if I file my return late, that is today on the 19th of August, then it will continue to be late. So the date of original filing will not change in this case, 139.5. I'll give you a small tip on what we do, guys. In our firm, if someone comes in very late that I want to file my return, I'm very late, what we do is we tell them that let's file your return on time, no matter what kind of return we'll file. So let's say the due date is 31st July. We'll file a blank return, but we'll file it on 31st July. So are we on time? Yes. And then we can change it. We can change everything, and we get to carry forward losses also. We don't have to pay the fee also. So hence, it's very good to file it on time. Even if you file it wrong, it's okay. You can always change it. So try and avoid 139.4. As a firm, we always try and avoid this section. We don't want our clients to pay interest or fee or not get the losses. So 139.3, 4 and 5 done. Let's do a quick revision on 139.5. 139.5 says, can you file a revised return? Yes, you can file a revised return. How many times you can revise it? You can revise it n number of times. Guys, I have written 5 only for a shortcut. You can change everything except the date of filing. That cannot change. That is section 139.4. Next is section 139.5. Next. Guys, earlier we had to attach a lot of documents along with the return. Example, if you spend some money, attach documents. If you've taken some expenditure, municipal tax you paid, show it to us, the bill. So earlier we had to file a lot of these things and we had to go and actually physically file. I've never physically filed a return, but it was supposed to be done earlier on. But now everything is electronic. So do I have to file all of these scanned, etc.? No, but you have to give some documents. So there's a section called section 139(6)(a). And 6A says that we want 6 attachments to it, or 6 documents, additional documents. The shortcut is attachments. What kind of attachments do they want? They say that if you are supposed to file your return, if you're supposed to maintain your books of accounts under 44AA, if you're supposed to maintain your books of accounts and we want to see your books of accounts, be it the P&L account or the balance sheet or the cash flow statement, etc., we want to see all of them. But if 44A is not applicable, that means you don't need to file or don't need to maintain your books of accounts, then what do I show? Just tell me the details. Tell me the sales amount, tell me the profit amount, tell me the cost amount, tell me the tax amount. So basically tell me the amount of stock, etc. Yes. So in this case, you have to just tell us the amounts, and in this case, you have to give us these documents, not physical copy, but online. So this is the concept. Just one second. This is the concept of section 139(6)(a), 6 attachments. Now, something very interesting that we in India are really obsessed with is the next 2 sections, guys. The next section is something we also saw in GST, that for our GST number we need a PAN. Otherwise you don't get a GST number. Same way, guys, for filing your return of income you need a PAN number. There's a section called section 139A which says, listen, you need to have a PAN to actually file your return. Guys, the same way you need a roll number to write your exam, same way you have to have a PAN. Otherwise, how will you file your return of income? So guys, what if I don't have a PAN? Is that an excuse of not filing return? No, that is not an excuse. So they say, if you don't have a PAN, then please by the 31st of May, the year is ended, it's 31st March, you know you need to file your return, then by 31st May, you please apply for a PAN card. Everyone, yes, everyone, including a non-resident who's filing return in India, has to apply and get a PAN number. Otherwise, he will not be able to file his return. And not just this, this PAN number has to be quoted. Guys, this PAN number has to be quoted. There is a huge list of transactions where you have to quote your PAN number. Do you have to by heart that list? No. You can read it, but I'll tell you the main things for which you need to quote it, starting downwards, guys, the biggest amount first. If you're buying an immovable property, congratulations, worth more than 10 lakh rupees, then you need to quote your PAN number. If you're buying a car or a bike, a motor vehicle, then you need to quote your PAN number. If you're buying jewelry of more than 2 lakh rupees, congratulations, you need to quote your PAN number. If you're taking a credit card, they will want to know your credit history, etc. So you'll need to quote your PAN number. And otherwise, guys, the limit is 50,000. That means if you're making an FD more than 50,000, then you need to have a bank, then you need to quote your PAN number. If you're making a DD of more than 50,000, then you need to quote your PAN number. So 50,000 is that common limit. More than that, you need to give your PAN number for most transactions. Let's recap this, guys. Very simple section, not important. In the exam, can they ask you this list? No, but you got to read it once so that in the exam there are no surprises if they identify that should you quote your PAN number or not. So let's quickly recap, guys. 139A. A is basically the main document which is called PAN, permanent account number. That number, if you have, great, you can file your return. If you don't have, let's say you're 18, you don't have it, but you started earning income, then apply it by 31st of May. If you don't apply, I forgot to mention, if you don't apply, the officer can also apply or send you a PAN number as a birthday gift. Yes, they can also give you a PAN number. Guys, this should be quoted. Your PAN number has to be quoted everywhere. Wherever you're doing major transactions, congratulations buying a house, give us the PAN number. Congratulations buying that favorite car or a bike, give us the PAN number. Congratulations buying jewelry or a credit card or an FD, etc. You need to give us your PAN number. Guys, the reason is the government wants to keep a watch on you. What are you doing? And hence they want you to code these PAN numbers wherever you undertake these transactions. And while PAN number was great, guys, I really like that blue card PAN number. Nice, it is a nice proof. But you know, it's so funny, when they made the PAN number, they missed out on one very important detail. I don't know if you're aware of what detail they missed out on, but they missed out on a very important detail, and the detail is the address. They don't have the address on the PAN number. They have my photograph, which I'm not really proud about. They have my name, they have my date of birth, they have my father's name, but they don't have an address. And because of that, they had to do an entire exercise, and they had to now have an Aadhar number. So there is section 139 AA, which is basically an Aadhar number. I don't have a shortcut for this, but remember, A is PAN and A is Aadhar. And this now Aadhar number, is it compulsory? Yes, it is compulsory. Watch out, watch out, watch out. There was a meme that, okay, anyways, I'll talk about the meme later, but right now, the Aadhar number, guys. So now, do you need an Aadhar number also? Yes, there's a 12-digit Aadhar number which you need when to file your return. So you need to have your Aadhar number as well. Just one second. Yes, so we need to have an Aadhar number. Now the Aadhar number, not just you need it, you need to link both Aadhar and PAN. This is such a waste, guys. First you apply for a PAN, then you apply for an Aadhar, and then you have to link both PAN and Aadhar. Yes, you have to link both PAN and Aadhar. There was a meme here that someone had stuck an Aadhar card on their actual PAN, not PAN card, actual PAN, and they had sent a picture, said now I have linked my Aadhar to my PAN. Although I'm not a big fan of that humor, but that was the meme that I had seen a couple of days back. So you have to link your PAN and Aadhar online at the return tax portal, yes. And if you don't link, guys, they kept extending the due date to link because people would not link it. Then the government got very angry and they said, if you don't link, then we'll put a fine of 1,000 rupees if you don't link it by 30th June 21. Sorry, the date is 31st March 21. If you don't link it by 31st March 21, then we'll have a penalty or fee of 1,000 rupees. But as a concession, after this due date, if you file it immediately, if you link it immediately till 3 months, within 3 months, that is till 30th June, if you link it, then it will only be 500. So there's a concession, yes. Up to 1,000 they may apply if you don't link it, but till 30th June the fee penalty is only 500 rupees. Is this a lot? No. But after this section, guys, after the government threatened us, everyone started linking their PAN and Aadhar, and this was a proof of your home, guys. Aadhar is a proof of your home, and hence the section is 234H. Quickly recapping, guys, the section is 139AA. It is the Aadhar number. Now you need to have an Aadhar. Now you also have a PAN. What do you do with those of them? Both of them have to be linked. If you don't link them, then under section 234H, H is for home. If you don't prove them they're home, then up to 1,000 rupees is the fee. Yes. Up to 31st March 2021. Yes. This could be a question in the exam because it's very recent. And it can be extended by another 3 months. Yes. Till 30th June 21. If you file, if you link it, then the fee is only 500 rupees. This is 139A. This is 139AA. Alright. Now, guys, you went to the best CA you found on Instagram. There are lots of Instagram influencers. So let's say you contacted one of the influencers and you said, listen, I need to file my return, and he helped you file your return, or she helped you file your return. And when they filed the return, there were 9 mistakes in it. Because the section is section 139.9, there were 9 mistakes in it. And the government sent an email back that, listen, you need to rectify these mistakes. So 139.9 is called a defective return. Guys, this is a section for a defective return. So is your return defective? Yes, your return is defective. Do you need to change it? Yes, you need to change it. So they will send you an email back saying that these things are defects. You need to correct them. Yes. Within 15 days of the intimation, you need to correct it. If you correct it, great. But if you can't get corrected in 15 days, can you apply for an extension? Yes, you can apply for an extension. How long? The officer will decide how long. But guys, if you don't correct it in 15 days, let's say you're going for a long holiday and you don't correct it, your CA also doesn't correct it, you don't ask for an extension, then the government will say that this is an invalid return. This return is an invalid return. Venkat, welcome to class. We are already in return of income. Be a part of it and watch and participate. So 139.9 is basically a defective return. If you don't, then it's an invalid return, which is great. But guys, there is one thing which is not considered a defect. What is that? If you file your return, but you have to pay some tax, let's say you had to pay 7,000 rupees tax, and you don't pay that tax, still it is a proper return, it is a valid return. So not paying tax along with return of income does not make it invalid. Why is that? The government doesn't need tax. Guys, the government needs tax, but they've already got it through TDS, TCS and advance tax, and hence here the government says even if you don't pay the tax along with the return of income, it is not defective. So that is section 139.9. Just one moment. Perfect. So this is 139.9. Quickly recapping, 139.9 means 9 mistakes. So defective return, do you have to correct the defect? Yes. Within how many days? 15 days. Can it be extended? Yes. You have to apply for it. If you don't correct it, it's an invalid return. And return of income filing without tax paying is considered perfectly okay. Yes, it's considered perfectly okay. Next, guys, whatever you do, you need to sign on things to make sure that they are yours. Attendance sheets you need to sign, checks you need to sign to verify that you are there. Same way in tax also, you need to verify your return. There is a section where you need to verify your return. How do you verify and who verifies the return? First, let's see who verifies the return. Very simple. For an individual, that individual will verify it. But what if that individual is always on the move, traveling a lot? Then the authorized representative can also verify it. But of course, when an authorized representative verifies it, you need to attach a power of attorney that you have given him the power or her the power to verify. Verify basically means like a signature. If it's an HUF, then the Karta can verify. Any co-partner can verify as long as he's an adult. Male, female, anyone, guys, doesn't matter. Or if they are not there, then authorized representative. A partnership firm, LLP, main managing partner can verify. Or if he is not there, then any partner can verify. And if they are not there, then authorized representative. Very simple, guys, very logical. But for companies, the MD can verify. If the MD is not there, then any of the directors can verify. And guys, can the shareholders verify? No. I cannot sign for Mukesh Ambani, guys, even though I am a shareholder of Reliance. So not the shareholders, but authorized representative. For political parties, it's funny, and that's why I'm mentioning it here. A CEO, there is a CEO of a political party, yes, then that CEO has to verify it. These are the people who have to verify the return. So quickly recapping, guys, who needs to verify? For the people, the main person or the authorized representative has to verify, and if they verify it, authorized representative, then you have to attach a power of attorney. But how do you verify it? Do you take a printout, sign it, take a scanned copy, send it? No. There are 3 mechanisms to verify it. You don't need to by heart them. First, you can take a physical printout, sign, and send it to Bangalore. There is a office central processing unit of the tax department. You can send it to them, which is very rarely used because this is cumbersome. Or you can verify through OTP, Aadhar OTP. So they will send a OTP number on your Aadhar registered mobile number and you can verify it. Or you can use a digital signature. The first and the last are time consuming, expensive. The second one is very easy, so most people use the second one. So you can verify it by physically signing it and posting it, or digital signature, or OTP Aadhar verification. This is section 140. Sections, I'll tell you which is important, guys. 139.9 is important. 139.4, 5 and 3, all three are important. 139.1 is important. So 139.1, 3, 4, 5 and 139.9, these are the only sections that are important till now. Just 1 minute, guys. Alright, so that brings us to one of the last sections, guys. Now, going to a CA and getting your return filed is an expensive affair. Not everyone can afford to go to a CA. So the income tax department has kept some boys under 139B, sorry. They've kept some boys, 139B, just like the Zomato has kept some delivery boys. Same way, you're under 139B. The income tax department has kept some boys, and these boys are basically called tax return preparers. So they wear a t-shirt which has TRP written on it, just like I have Unacademy written, and they have TRP written on that t-shirt, 139B TRP, which is tax return preparer. Can you go to them and they help you file your return of income? Yes. But who can't go to this TRPs? A very interesting question it could become, guys. First, if you are someone who's subject to audit, you cannot go to them. That means if you're a big fish, if you are auditable, then you cannot go to them. And who can be TRPs? The section says the opposite, who cannot be TRPs. So the following cannot be TRPs. First, CAs cannot be TRPs. Why do you want to be TRPs? You are anyways a CA. Lawyers cannot be TRPs. If you are a banker with which the assessee has a banking relationship, you cannot be their TRP. And if you are an employee or a slave of a small company, of a private company, then you cannot be a TRP. So these are 4 people who cannot be a TRP. CS law is very easy to understand. Banker with whom the assessee has a banking relationship, then that person cannot be his TRP. And if you are an employee of a small company, then you cannot be a TRP. These are people who cannot be a TRP. Auditable persons can't go to TRPs, and return of income has to be filed, can be filed using TRPs. Guys, by the way, that is the chapter done and dusted. There is an amendment which we will see in the amendment session, but right now I'm looking at the ICI material for this chapter. Just 1 minute. Here we go, return of income. Guys, wherever we can find questions, we'll do those questions. 139.1, due date is your, yes, illustration and solution. Paras, who's 55 years, is a resident of India. During the year, he has interest of 2,88,000, which was credited to his non-resident external account. Guys, NRE account interest is exempt, by the way. 30,000 was interest of his FD, and SBI credited to his savings account 30,000, and 3,000 as interest on this saving account. Is Paras required to file his return? Guys, section 139(1) says, first, is he a company or a firm? No. Second, his GTI plus 54 exemption should be more than basic exemption limit. His basic exemption limit is 2.5 lakh. Let's check this. What is his GTI, guys? His GTI 2,88,000 is exempt, so I'm not even taking it to GTI. 30,000 and 3,000, 33,000. Or you might think, oh, I have a exemption or deduction under 80 TTA. No, guys, we have to look at GTI, not TI. So we will not see deductions. 33,000, no 54 exemption. So only 33,000. Is it more than 2.5 lakh? No. So Paras, congratulations, you saved yourself some money. You don't need to file a return of income. What will be your answer if he has incurred 3 lakh as travel expenditure for self and spouse to US? Guys, because you have had coffee of more than 2 lakh rupees, then as per explanation to section 139(1), you will have to file your return of income. Sorry, for the second one, you'll have to file your return. Anything in red, you don't have to see. Anything in yellow, you definitely have to see. Guys, this was a question in the May paper. I'll show you this question. First, we'll do it from here, and then I'll show you the May paper. Just to tell you that everything in the module is important, guys. Especially, not everything, my bad. I'll take my words back. Every question in the module is important. Explain in brief reasons whether the return of income can be revised under section 139(5) in the following cases. Guys, here I want to just stop and I want to just remind you that 139(4), can you file a belated return? Yes. And 139(5), can you revise your return? Yes. But guys, after your due date, let's say your due date was 31st July and you can file it belated till December 31st. You can also revise it by 31st December anytime. So I understand till 31st December you have the right to do it. But guys, the officer after 31st July, he is waiting for you, and you did not file your return. So can he be free and can he pick up your matter in November to do a best judgment assessment on his own? We'll see at CA final what that means. But can he pick up the matter and do assessment of his own? Yes. Then after that, can you revise or belated? No. So till when can you file the belated return? Till 31st December or assessment, whichever is earlier. Same with revised return, you can revise it till 31st December. But if after your due date he picks up your matter, you did not file, or whatever you filed he picks up the matter and he assesses you, then you cannot revise after that. Let's see, guys, explain with brief reasons whether the following returns can be revised. Guys, any return can be revised. Any return can be revised. And the shortcut is, guys, can you change in life? Can I change in life? Yes, anyone can change. So any return can be revised. Belated return filed under section 139(4), can it be revised? Yes, but the return will still remain belated only because the date does not change. Return already revised once, can it be revised again? Yes, you can revise it any number of times. And return of loss filed under 139(3), yes, any return can be revised. Guys, this was the same question. After we finish, I'll show you the May paper. The same question was there in the May paper also. Guys, keep that shortcut in mind. Anyone can change and hence any return can be revised. This is a list of transactions for which, guys, you need to show your PAN number, opening an account, buying a motor vehicle. So you just need to go through them once. You don't need to by heart it, honestly. Mainly the limit is 50,000. (234H) is a new section for linking of PAN and Aadhaar. Guys, please read and please answer this question on the screen. You get 1 minute for this. Good answer, Rinad. Mrs. Hetal, an individual engaged in the business of beauty parlor, has got her books of accounts for the year audited. So that means she's a big fish. Yes. Her total income for the year is 6,35,000. She wants to furnish her return of income through a tax return preparer. How will you answer this? You will say that as per section 139B, a tax return preparer, etc., you will define person. However, someone who is subject to audit cannot use the services of tax return preparer. This is all verification. Who can verify the return? I have not discussed this section, guys, but let me just tell you about this section, section 140A, which is called self-assessment tax. What is this new tax, guys? It is not a new tax. Let's say you had to overall pay 1 lakh rupee tax. You paid TDS 30,000, TCS 30,000, and advance tax 30,000. So you paid 90,000. So how will you pay the balance 10,000? The balance 10,000 you will pay when you file your return, called self-assessment tax. What if you file your return late? Then on this you will have to pay interest under section 234A at the rate of 1% till you pay this amount. Guys, this chapter, it will be good to see exam questions also from this chapter, but here we go. Right now, looking at the module questions, please check and please answer the first and the second one. You get a minute for both of them, please. The B part is very, very interesting, very important, the B part. So please, this one has to be done really well. Let's do this, guys. Return of income of LLP could be verified by any partner. Guys, actually it should be verified by the managing partner. If he is not there, then any other adult partner, and if they are both not there, then authorized representative. The time limit for filing the return under section 139(1) in the case of Mr. A, having a total turnover of 160 lakhs for the year ended, 100 lakhs is received in cash, is 31st October. Basically, they are saying that there is a person called A whose turnover is 160 lakh. Is he a big fish? Guys, A turnover is 1.6 crores. Is it more than the limit prescribed under 44AB for audit? Yes, the audit limit is 1 crore. For some people it's 10 crore, but that is only if your cash is very low. His cash is very high, so 10 crore limit will not apply. So will he have to get his books of accounts audited? Yes. I repeat, his turnover is 1.6 crore. 44AB says anyone who has turnover of more than 1 crore in business is a big fish. They have to get themselves audited. 10 crore is also there, but 10 crore won't apply to him because he has a lot of cash transaction. For that, cash should be maximum 5. But guys, this is first. Mr. A has an option. If he goes for presumptive taxation 44AD, which he can go because that is up to 2 crore rupees, you can go. Then the best part is you don't have to get self-audited. So in the first case, your due date will be 31st October, and in the second case, it will be 31st July. So your answer that whether he's opting or not, it will be 31st October is wrong. In one case, it will be 31st October, and in the next case, it will be 31st July. Please check question number 2. You get a minute to read and answer this. Let's do this, guys. Mr. Vineet submits his return of income on 12th September for the year 22-23, consisting of income under the head salaries, house property and bank interest. Good job. 3 returns, 3 incomes, but I think he's filed it late. On 21st December 2022, he realized that he has not claimed deduction under section 80 TTA, which is basically for interest income, in respect of his interest income on his saving bank account. He wants to revise his return. Can he do so? Yes. As per section 139(5), you can revise your return anytime till 31st December or till the time you are assessed, whichever is earlier. Doesn't seem like he's assessed. So can he revise it? Yes. Would your answer be different if we discovered the omission in January or March, or in this case March? Yes, unfortunately, that is too late to revise. You cannot revise it. You cannot revise it after 31st December of the assessment year. Looking at the next question, guys. Please read. Very simple. 1 minute for both questions together because very, very simple. Over to you all. The assessing officer has the power to allot PAN to any person by whom no tax is payable. Absolutely true. Of course, the answer is here also, but I'm hoping you're not checking it. And where the Karta of an HO is absent from India, the return of income can be verified by any male member. That is wrong. Not male member, guys. We are living in an equal society. Any male or female member. So this one is wrong. Explain the term return of loss under the Income Tax Act. Can any loss be carried forward even if return of loss has not been filed as required? Please check, please think, and let's discuss. Guys, return of loss is basically if the assessee has suffered any loss under any of the heads of income, then a return of loss is filed under section 139(3). The said return of income has to be filed within the due dates. Only then losses can be carried forward. Except, guys, can any loss be carried forward? Yes, there are 2 losses which can be carried forward: income from house property or loss from house property. and unabsorbed depreciation. Of course, also unabsorbed scientific research and also unabsorbed family planning expenditure can be carried forward even if you've not filed your return or you filed it late. Perfect. Good answers there. I'm not doing this question, guys, because this is basically when are you required to quote your PAN. Generally more than 50,000 rupees. In case of credit card, no limit. In case of immovable property, more than 10 lakhs, you need to file your return of income. Just checking it here. Guys, life insurance premium 45,000. Check the answer. No, since the amount does not exceed 5,000. Here, payment of 1 lakh to a 5-star hotel. Yes, 60,000 paid in cash. So you have to just check that list, guys, and then it's a very simple list. Just read it and you'll get your answers. Mainly the amount in keeping in mind is 50,000. Alright, with that, guys, we have come to the end of this book here. I am going to be taking questions now from the previous year's exams. Let me just upload that. Alright. Discuss the provision of section 139A which provides the persons who are compulsorily required to apply for allotment of permanent account number. Guys, here we've not discussed this because that time it was a recent change, so hence there was a question in the exam. This is not an important exam question for you all now in 2022, but still, anyone whose sales are more than 5 lakhs or whose income is more than basic exemption limit, etc., those people are supposed to apply for their PAN number so that they can file their return of income. This is not important now. There was a change that time and hence that was important that time. What is the fee for default in furnishing the return of income under section 234F? This is important, guys. The fee is 5,000 rupees per return, but if the income, total income is up to 5 lakh, then it becomes only 1,000. To whom the provision of section 139A relating to quoting of Aadhar number do not apply. Guys, Aadhar number has to be now quoted by all. Earlier there was a limitation that some people do not have to apply for a Aadhar number, but now everyone has to, and they have to link it. Elaborate the conditions non-fulfillment of which would render return of income defective. Who is maintaining regular books of accounts? Guys, if you are maintaining regular books of accounts, then under section 139(6)(a, you need to give extracts of the P&L, balance sheet, cash flow statement, etc. In case the same are not provided, then it will be a defective return under section 139(9). Guys, do we have enough to write on 4 marks? No, we don't. And hence, guys, this question 4C sometimes has option. So you should avoid these kind of questions if you know the other questions better. So you should choose your questions well. But something like this is a great question to answer because you'll have a lot to write. Check this, guys. Very similar to a module question that we've just done. Check and let's answer. Guys, here again, this is NRE account, so exempt. These are the only 2 incomes. It is not more than basic exemption limit and hence he is not required to file under section 139(1). Excellent question, guys. Here, enumerate the cases where a return of loss has to be filed on or before the due date. Also enumerate the cases where losses can be carried forward, even though, guys, same module question. Every year they pick up one question on the module and put it here. Guys, this one, what would your answer if you had incurred 4 lakh on travel expenses on newly married son and daughter-in-law? Then he is coffee, he'll have to file his return. Guys, what if I told you, I can tell you for sure exactly that which question will come in return of income. Watch out at the end of the session, or probably in the next session, I will tell you exact question that will come in your exam from return of income, and you will be surprised to find that in your exam. Let's see how my prediction works, but I will not tell you right now. Wait for the next leg. In the next leg, I will tell you that 4-mark question, which is definitely there in your exam. So this we know, we've already done this. Guys, this is the last question that we are going to be doing. Everyone, eyes and attention on question number 4C. I'm not doing this because this is the same thing which was there in the ICM material. Over to you. Let's do this. Alright, let's do it one by one, guys. In the following cases, the total income of the assessee or the total income of any other person in respect of the HC assessable does not exceed the basic exemption limit. They are required to state with reasons whether the assessee is still required to file the return of income. That means, guys, the second part or the first part is not applicable to them. Let's do this one. Manish and Sons sold a residential house on which there arose a long-term capital gain of 12 lakhs. Which was invested in capital gain bonds 54 EC, so that no long-term capital gain was taxable. But guys, even if it's not taxable, even if the income is 0, but 54 exemption is 12 lakh 50, which is greater than the basic exemption limit of 2 lakh 50, and hence in this case, will they have to file the return of income? Answer is yes. Next, Mrs. Archana was born in Germany and married in India. Alright, very different combination, guys. Born in Germany, married in India. Her residential status under section 6(6) of the Income Tax Act is resident and ordinary resident. She owns a car in Germany which was used for personal purposes during a visit to her parents' place in that country. Guys, if you are a resident and ordinary resident and you have assets outside India, then you need to compulsorily file the return of income, but car is not considered in the definition of property for this purpose, and hence you don't have to file a return of income. Archana, relax. You don't need to, just because of this reason, you don't need to file a return of income. And next, Sudhakar has incurred an expenditure of 1 lakh 20 towards consumption of electricity. Guys, I don't know how, but 1 lakh 20 electricity bill. The entire payment of which was made through banking channels. Guys, in this case, he has to file his return of income because he's drinking coffee. That coffee is basically explanation to section 139(1). Perfect, guys. With this, we have completed one more chapter called return of income. We come back in 5 minutes to look at computation of income, rates of tax, and complete today's agenda for the first session. Then we have a break again, half an hour. We come back and we look at amendments and some questions to solve. Thank you and see you guys in 5. Guys, what's next on the agenda is a very nice thing in rates of tax. So as you know, guys, in rates of tax, let's just summarize what all we've done and what will be useful in the exam. What will be useful in the exam is individuals, guys. Only and only individuals, yes. or maybe an HUF. Do we know the rates of tax? Do we know the basic tax? Yes, we do. Do we know their basic exemption limit? Yes, we do. Do we know the fact that some of them have a higher basic exemption limit? Yes. And do we know that after basic tax, immediately there is something called rebate if you are earning up to 5 lakh rupees. Next, we have a surcharge. And next, we have HEC. So we learned all of that. Then we also learned something called marginal relief. Whenever your income is slightly more than, total income is slightly more than 50 lakh, 1 crore, 2 crore, 5 crore, or whatever is your surcharge limits, then you get something called marginal relief. And last, we also were sad, or actually happy, because we also learned alternate minimum tax, which is basically if you have 3 deductions, either specified business deductions or awesome area deductions or deductions like JJAA, QQB, RRB, then we had alternate minimum tax at 18.5%. All this was done and dusted, so we were getting really good at rates of tax. I don't know if you've discussed it, so I'm going to discuss it now also quickly. We've also discussed rounding off. Rounding off happens at 2 places. One, total income, yes, and one, total tax, not basic tax, not surcharge, not cess, but the total tax. 2 rounding off happens. Here rounding off happens to the next or the nearest 10. Basically, if the last digit is 73, it becomes 70. And if the last digit is 78, it will become 80. It basically goes to the next 10 if it's 5 or more. Then we also looked at something called a scheme of partial integration or scam of partial integration, whereby when you are enjoying the best of both worlds, that means agriculture income more than 5,000 and taxable income more than basic exemption limit, and you are someone who enjoys a basic exemption limit, then in that case the scheme of partial integration applies. We have done all of this and we have made considerable progress in rates of tax chapter. So now we come to option. Guys, options are always good in life. Yes, it's always good to have options, guys. But this option, whether it's good or no, we'll have to check. So generally, we pay tax from 0 to 2.5 lakh rupees. We pay only 0% tax, which is the first slab, which is great. More than 2.5 lakhs up to 5 lakhs, we pay at the rate of 5%, which is also nice, steady increase from 0 to 5. But if it's more than 5 and if it's up to 10 lakhs, then suddenly our rate jumps to 20%, which is, I think, a big blow, which is a big jump. And more than 10 lakhs, suddenly it also jumps to 30%. It's almost like walking a stairs, guys. One stair is nice, second stair is nice, suddenly you get 4 stairs are missing, you have to actually jump from 5 to 20%, and then 2 stairs are missing, you have to jump from 20 to 30%. This jumping is not healthy, it's not right. And hence, the government has given us an option. It's still an option, guys, it's not compulsory. It is an option which is called a better available choice. 115 BAC, better alternative choice or better available choice. So shouldn't everyone take up this new option? No, guys. So there are some good things and there are some bad things. So first we'll discuss the good things and then we'll discuss the bad things about this alternative choice. The good things first. First, congratulations, there are better slabs and there are better rates. So let's discuss that first. The slabs, the first slab is the same up to 2.5 lakh, 0. And then the slab increases by 2.5 lakh, 2.5 lakh to 5 lakh, 5 to 7.5 lakh, 7.5 lakh to 10 lakh, 10 lakh to 12.5, yes, it doesn't stop at 10, 12.5 to 15, and more than 15 lakhs. So 1, 2, 3, 4, 5, 6, 7 slabs, or if you want, start with 2.5 and keep increasing till 15. So every slab increases by 2.5 lakh rupees, yes. And guys, the rate increases by 5%. So this is 5%, then 10%, then 15%, then 20%, then 25%, and last is 30%. So basically, are we still going to 30%? Yes, but we'll go only after 15 lakhs. In the earlier, we were going above 10 lakhs only at 30%. So are the slabs better? I feel they are better because they go gradually up. It's not like 5 to 10 lakhs straight. It is gradual increase, 2.5 lakh increase. And the rates also go up gradually, 5% here. Let's take an example, guys. If my income is, let's say, 18 lakh rupees, I'll give you a shortcut here. How will you calculate my tax? Assuming I'm in this new option. First 2.5 lakh rupees, 0. Next 2.5 lakh rupees, I'll give you a shortcut, guys. Every time keep increasing it by 12,500. How did you get this? Because the gap is 2.5 lakh and 2.5 lakh into 5% is always 12,500. So the next is 12,500. This is up to 5 lakh. Up to 7.5 lakh, next increase it by 12,500, again 25,000. Then up to 10 lakhs, next slab, again increase this by 12,500, so 37,500. Next, this one is still 12.5 lakh, again increases by 12,500, that is 50,000. Next, which is up to 15 lakhs, again increase it, so 62,500. So 1, 2, 3, 4, 5, 6, and now more than 15 lakh is 3 lakhs. On that 3 lakhs at 30% is 90,000. This one you don't have to increase by 12,500 because, guys, it is more than 15 lakhs. So a shortcut is every slab, if it's a complete slab, it will increase your tax liability by 12,500 in this case. Yes, in this case, that's a shortcut. Yes. So this is what you will land up paying as basic tax. I hope this is clear, guys. So this is the first advantage. What is the first advantage? The slabs are better and the rates are better. But there is a small disadvantage, guys, that you don't get any higher basic exemption limit. So whether you're 60 years or 55 years or 75 years, your slabs start from 2.5 lakhs only. So that there are no better limits there, guys. All right. Next good thing is even if you're sad in this case, even if you have specified deductions or awesome area deductions or JJAA, QQB, RRB, AMT will never apply in your case. That's a good thing. Yes, it's a great thing, guys. No one is going to knock on your door and ask for extra money. So AMT is not there. That's a good thing. Yes. And third good thing, guys, do I have to exercise the option at the start of the year? No. This option can be exercised. It's an option, guys. It can be exercised anytime till return of income filing. That means the year has ended, you're in July, you're filing your return. That day also you can exercise. Yes, you can choose the new and the old, whichever is beneficial, exercise it. Except for salaried persons, guys. Salaried persons have to decide ahead because you know the employer or the master has to deduct TDS based on their average rates. So the salaried persons are an exception. Otherwise, you can choose any time. Also, you can opt in and opt out every year, guys. That means this year, can I go in the new scheme? Next year, can I go back to the old scheme? Yes, you can opt in, opt out anytime except PGBP. That's an exception. That means in PGBP, you can opt in. Great. Once you opt it out, you cannot go back. The door closes for you. Unless you give up PGBP or the year you don't have PGBP, then again you have the right to opt in, opt out. But if you have PGBP, then only once you can enter. Once you get out, the door closes for you. Alright, so this is the concept. 115 BAC, the good part is over. Now, guys, the scary part about this. Con number 2, which is the biggest problem why I have never taken this scheme up. Nor do most of my clients, they don't take up this scheme up because the second problem, guys. See, income tax is all about two things, incomes and deductions. In this new scheme, they have not changed the income. So income, they are very greedy. They want to tax all your incomes. But deductions, they have removed a lot of deductions. That means your income is still there, but your deductions have been removed in a large way. So how do we see this? We will go chapter by chapter. In every chapter we'll see what are the deductions that have been taken away. So here we go, guys. First, IFOS. In IFOS, do we have deductions? Can I take will, repair, pick in general? Yes, you can take all those, except one deduction you cannot take, that is the family pension deduction. If you remember, guys, family pension is your family getting some pension that is taxable under IFOS, and you would get a deduction of 1/3 the amount every month, or 15,000, whichever is less. That deduction you will not get anymore. So in IFOS, that was the change. Yes. The next head of income, capital gains. In capital gains, as you know, you're selling an asset like a house, you're buying something, you're selling something. In that case, there are three deductions. One is brokerage, etc., cost of acquisition, cost of improvement, or index cost of acquisition, index cost of improvement. Here, guys, absolutely no change. Thankfully, guys, there is something where they have kept it the same. Yes, there is absolutely no change in this case. Moving now ahead. After capital gain is a head called PGBP, where there is a huge change. Watch out. The shortcut is additional scientist developed awesome covaxin. Guys, this shortcut was developed when COVID was at its peak. So hence covaxin is involved here. Additional scientists developed awesome covaxin. These are the deductions which you will not get in PGBP. Let's check. Do you get depreciation? Yes, of course. But you will not get additional depreciation. So if you are a manufacturer or a power generating distribution transmission company, and remember on new plant and machinery you are getting 20% additional, say goodbye to that, because you won't get that anymore. Next, scientific research. Guys, you could be doing scientific research in-house, or you could be writing checks for outsiders. That writing the checks for outsiders, that you will not get any deduction. That means you can still write the check, but you will not get the deduction. Next, also develop. If you remember specified business, 35 AD, 100 bed hospital, etc. In that case, you will not get 100% deduction. Sorry, say goodbye to that. You will get depreciation, but you will not get 100% deduction there. Awesome area is no longer awesome, because if you export from an SEZ, you would earlier get a deduction under 10A. Actually, it should be a part of deduction, but I'm writing it here only. You would get a deduction under 10A. Say goodbye to that. No deduction anymore. And this is a CA final concept, so we'll just put an X next to it. This is for CA final. So in PGBP, guys, no additional depreciation, no scientific research for outsiders, no awesome area, and no 35 AD deductions in case of PGBP. Just 1 second. Sorry, my bad. I just made a small mistake here. I'll just correct it. So here in 35 section, in-house is not allowed, outside is still allowed, my bad. So additional depreciation you will not get. Scientific research in-house you will not get that 100% deduction. Of course you will get depreciation, but you will not get 100% deduction. Outsiders you can still get. 35 AD also develop, you will not get 100% reduction. Depreciation you will still get, and awesome area you will not get. Next guys is income from house property. Guys, the first head of income that we did about 5 days back, income from house property. Guys, here you have 3 deductions: municipal tax, 24A, 24B. What did they take? Nothing guys, no change, except in case of SOP, unfortunately they will not give 24B. That was the only deduction they would give. They've taken that away. So SOP, if you remember, everything was nil, and only 24B interest deduction you would get. That has been taken away. So in SOP you will not get any deduction now, only for SOP. LOP no problem. And a very big blow in salaries. In salaries guys, they've taken away every deduction. SEP they've taken away. Remember SEP, standard deduction, entertainment allowance deduction, which was only given to government employees, professional tax deduction, taken away. LTC concession, which you would get in a block of 4 years twice, taken away. Any other exemption like HRA exemption, taken away. Conveyance, etc., all taken away except for the shortcut is blind can do tours. These 4 are still there. What is this? For blind, handicap, deaf, mute people, they would get 3,200 rupees exemption for transport. That they will still get. So if they get allowance, will they get an exemption? Yes. For conveyance, you would get an allowance. The amount you spent, you will still get. Daily allowance, the allowance you get, if you spend some amount, you will still get. And tours and transfers, if you spend some money, you will still get. So blind can do tours, only 4 of them remain, otherwise everything gone out in salaries. So heads of income done. 1, 2, 3, 4, 5. Out of heads of income comes clubbing. In case of clubbing, you add other people's income in your income, if you remember. And for minor child, if the income you add, they would allow you to minus 1500 rupees, if you remember section 1032, 1500. That they have removed. Anyways, it was very small, so now they've removed that as well. Yes, they've removed that. Set off and carry forward. Guys, imagine you're a vegetarian and you get some egg at home and your parents are very pissed at you. So they will not allow you to get that egg at home or that chicken at home. And will they allow you to keep it in the fridge? Of course not. If they don't allow it to enter, why will they allow it to be carried forward to the next day? Same concept here also. If additional depreciation or scientific research or 35 AD, if this is not allowed as a deduction, SOP 24B, if this is not allowed as a deduction, then their carry forward will also not be allowed of above expenses. That means carry forward is generally allowed, but if these expenses are not allowed, then their carry forward will also not be allowed. That is not allowed in carry forward. And in set off, guys, a very big blow. House property head, which was friendly but shy, they could knock on other people's doors and get 2 lakh rupees. Their door has been locked. That means house property, you can set off within the family, but you can't go outside. 2 changes, guys, I'll repeat, very simple. You cannot carry forward any of the expenses. Where the main expense is not allowed, you cannot carry it forward. Okay, so that is on carry forward. Now on set off, anything? Yes. And set off, house property earlier could knock on people's doors, now they can't knock, so they are not friendly and shy anymore, they're non-friendly. Can they set off within? Yes, but they cannot knock on other people's doors. Next, guys, clubbing, set off, GTI. There is nothing thankfully in GTI. So now straight after GTI, deductions, and the biggest con is this deductions, guys. They've taken away all deductions. 80C gone, 80D gone, 80G gone, everything gone, all gone except 80CCD2 where your master was contributing to the national pension scheme and you would get a deduction, that is still there because they want the master to contribute to NPS. And 80 JJAA, job add, that is still there because the government wants job to be added. So only these two there, yes, only and only these two there, otherwise everything has been done and dusted. Just 1 second, guys. Alright guys, so these are the removals. Just quickly let's recap. This is the main thing and then I'll tell you how to solve this in the exam. But it's very simple. This is going to be a strong point. But first let's recap, guys. There are cons in this. Yes, there are cons. The higher basic exemption limit, sorry, you will not get. Then a lot of deductions have been removed in IFOS, family pension out, capital gain nothing, PGBP, additional scientist developed, OSIN coaxin, they are out and their carry forward is also out. IFHP, only one change, SOP, only for self-occupied property, interest is not allowed anymore. Salaries, everything is out of the window except blind can do tours. Clubbing, that 1032 is out. Guys, I forgot to mention. Then in exemption chapter, that 1017 MPs, MLAs, that is also out, but I'm pretty happy about it. MPs, MLAs now will be taxed on their allowances if they want to go under this new scheme. Set off, carry forward has been disallowed and set off is not allowed for house property outside. And all deductions have gone out except 80 CCD and 80 JJA. Now guys, how do we look at this from an exam perspective? How do we answer this in an exam setting? I'll show you here. Guys, check it out. First, guys, let's say I already have an example. I'm just going to convert that into PDF and show it to you all. Just 1 second. We will do the regular provisions. So we'll solve this question like there is no 115 BSc and then we'll solve it for 115 BSc also. So I'm writing your regular provisions and then we will write ahead 115 BSc, but right now let's do regular provisions. As a very nice shortcut I want to teach you for 115 BSc, Mr. Y carries on his own business. An analysis of his trading and P&L account for the year ended 31st March revealed the following information. The net profit was 11,20,000. So you always start with that and then whatever is wrong or right, we will do the correction. The following incomes were credited in his P&L account. Income from UTI, 22,000. Guys, what do we do of this? This is in the wrong head because this is PGBP. So I'll remove 22,000 and I'll put it under IFOS. So here guys at the bottom, let's make IFOS here. IFOS, I'm going to put 22,000. Next, interest on debentures 17,500. Again, I will remove it from here because it does not belong to PGBP and I'll add it here 17,500. Winnings from horse races 15,000. Again, I will remove it from here 15,000 and I will put it here 15,000. But I will keep in mind guys because this one is flat rate at the rate of 30%. So I'm just keeping this in mind at 30% flat rate. it was found that some of the stocks were omitted. Omitted means you have not taken it. Remember, closing stock, higher the closing stock, higher the profit. But this was omitted, so the closing stock was lower, so the profit is lower. So do we have to add to the profit? Yes, 12,000. And opening stock was also lower, so opening stock is lower, profit is by mistake high, so you need to minus opposite impact for opening stock. Rupees 1 lakh was debited in the P&L account being contribution to a university approved and notified under section 35. Is that okay? Yes, this is okay. There is no problem with this. Salary includes 20,000 paid to his brother, which is unreasonable to the extent of 2,500. So you minus 20,000, but you'll have to add back 2,500. So this is 2,500 adding back. Advertisement expenses include 15 gift packets of dry fruits costing 1,000 per packet presented to important customers. That's a business expense. Not everything is wrong. So this is perfectly okay. Total expenses on the car was 78,000. The car was used for both business and personal expenses. 3/4 for business. So 1/4 is personal. So 1/4 I'll have to add back. That is 19,500 I'm adding back. Next, miscellaneous expenses include 30,000 paid to A and Co or goods transport operator in cash. Guys, to GTA if you pay in cash, no problem, up to 35. So this is perfectly okay. Depreciation debited in the books of accounts was 55. As per income tax rules, it was 50. So this is 50,000 you will minus and 55 you will add back because that is wrong. Drawings is 10,000, but drawings cannot be a deduction. So if you minus drawings, you'll have to add it back. So 10,000 I'm adding it back. And investment in national savings certificate is 15,000. You have minused it. Sorry, you can't minus it from here. You will add it back. Why? Because this is PGBP, National Savings Certificate. You will minus only under 80C. So guys, is my PGBP ready? Yes. This I will have to look at when I do 80C. What else, guys? Is there any hidden deduction like 80 TTA, 80 TTB? No. Alright, so everyone be with me. This is my PGBP. 11 lakh 20 minus 22 minus 17,500 minus 15,000 plus 12,000 minus 8,000 plus 2,500 plus 19,500 minus 50,000 plus 55,000 plus 10,000 plus 15,000. So this, guys, this was a mistake here. It's 50. So total PGBP is 11,21,500. If you want to check, we could also check it. The answers are right here only. So PGBP 11,21,500. And IFOS is 22,000 plus 17,500 plus 15,000 is 54,500 is IFOS. So I'm taking IFOS also 54,500. This is PGBP and this is IFOS. This is my calculation of total income and tax paid. Guys, any other head of income? No. So these are the only two head of income. So 11,21,500 plus this is 11,76,000. This becomes my GTI. Yes. From that, can I minus national savings certificates 15,000? Yes, I can minus 15,000 national savings certificate. So minus 15,000. So my total income become 11,61,000. Now this person is Mr. Y, and assuming he is below 60, let's calculate his tax liability, guys. Up to 2.5 lakh nil, 2.5 to 5, 12,500, 5 to 10 lakh, 1 lakh, and 11,61,000 minus 10 lakh into 30% plus 112,500 is basic tax is 1,60,800. I hope you know how to calculate this basic tax, guys, slab wise. There is no rebate because his total income is not up to 5 lakh. There is no surcharge also. There will be a cess, so into 104%. So it is 1,67,232 is his tax liability. No, guys, sorry, I am wrong here. My bad. On 11 lakh 61, my bad, first there is a casual income of 15,000. So on that casual income of 15,000, the government is expecting 30%. So 4,500. So I'll show you how to do this. If you understood till here, let me show you how the government expects you to do this. They expect you to take your 11 lakh 61 and break it into 4 parts. 1, 2, 3, 4. Is there any normal rates of tax? Is there any 20%, 15%, 10%? And outside of this is casual income. So out of 11 lakh 61, your casual income was 15,000. So on that, the government expects 30% flat. So 4,500 you have to pay. Yes, you have to pay. And on the remaining 11 lakh 61,000 minus 15,000, that is 11 lakh 46. Now you will have to do slab rates. So casual income will not be subject to slab rates. No. So 11 lakh 46 minus 10 lakh into 30% plus 112,500 is 1 lakh 56,500. 1 lakh 56,300. I'll repeat what I just did. I found out my total income. Congratulations. But my total income has some casual income. This is my casual income on which the government wants 30% tax. They don't want any basic exemption limit, nothing. So 4,500 is something that I have to pay the government. Now, out of 11 lakh 61, if I minus 15,000, I get 11 lakh 46. On this, can I use the slab rates? Yes. So that is 1 lakh 56,300 plus 4,500. So 1 lakh 60,800 is what I need to pay. Into 104% is 1 lakh 67,232. Rounded off 1 lakh 67,230. This is my tax liability. I'm just checking 167,230. 167,230. Just 1 second. Sorry, here it is. This is my total income. 11 lakh 76,000 gross total income. 11 lakh 61,000 is my total income. They've not calculated the tax liability. No, they haven't, because the question has not asked for it. Maybe. Yes, they've asked only total income, but no problem. We've calculated the tax liability. 1 lakh 67,230 is your tax liability. Now, once you understood this, guys, now let's see what if this person had opted for 115BAC. Guys, in that case, it's very, very simple. 115BAC. I'll show you how. Guys, in 115BAC, it's very, very simple. If there is any deduction that you have taken which is not allowed, add it back. So what you do is you start with the total income, 11 lakh 61,000. And if there is any deduction, only deductions, guys, because income no changes, only deduction. If there is any deduction that you have taken here which is not allowed in 115BAC, add it back. Let's check. Is there any IFOS family pension deduction? No. Is there any capital gain? No. Is there any PGBP? Yes. Additional scientist developed awesome covaxin. In that case, guys, there was one which was university approved under section 35, but that is allowed. In-house is not allowed. Next, under PGBP is done. Salaries, is there anything? No. IFHP, is there anything? No. So clubbing is not there, set off is not there. Only thing, this investment is there, which is now not allowed under 80C. So will I add 15,000? Yes. So 11 lakh 61 plus 15,000 will give me 11 lakh 76,000. So my total income changes. Yes. Now, again, to calculate tax on casual income, again I have to pay 4,500. So that is I have to pay. And on the remaining 11 lakh 61,000. So from this, if I remove the casual income, it's 11 lakh 61,000. On that, I have to apply the new slab rates. Yes, 2.5 lakh, 5 lakh, etc. The new slab rates. Let's apply that. up to 2.5 lakhs 0, then up to 5 lakhs 12,500. So like that I have to apply the new slab rates, guys, and based on the new slab rates you will get the tax liability here. You will get the total. Surcharge will not be there, cess will be the same at the rate of 4%. So if you want, as a homework right now or as something that you do on self, on 11 lakh 61, try and do the calculation. I'll help you here, but first you try. This is your total income, 11 lakh 61, besides the casual income. How much will you pay as per the new slab rates? Do it and we'll discuss it in 2 minutes. Alright, let's do this, guys. On the first 2.5 lakhs, 0. From 2.5 lakhs to 5 lakhs is 12,500. From 5 lakhs to 7.5 lakhs, again 12,500. From 7.5 to 10 lakhs, again 12,500. And from 10 lakhs to 11 lakh 61,000, 11 lakh 61,000 minus 10 lakhs is 1 lakh 61. This is 8050. So if you total it up, it should give you 45,550. Guys, this is the tax liability. So I'm just writing it here. 45,550. So plus 4,500 will give you 50,050. No surcharge, cess of 4% into 104%, which will give you 52,052. So guys, clearly beneficial, this new rate 115 BSE. So this guy should take up the new scheme. Why? Because he hardly had any reductions, guys. So hence this new scheme is applicable here. Alright, now guys, we are done with the rates of tax also. Now it's time for us to look at computation of income. The best way is this book only. We have lots of sums here on computation of income. Let's check this one first. Over to y'all. Y'all get 5 minutes to read this question. I'll just introduce what this is. There's a person or there's a girl called Charlie. You need to find out her residential status first. You need to compute her total income second, and along with the tax payable. Guys, one question like this and a few more questions like this will make you exam ready. So try and do this. What we can do is every question that we solve, we'll also look at it from 115 BSc perspective. So over to y'all. First 5 minutes for y'all to read, get yourself used to, open up the rooms, guys. My advice is whichever income you see, open up that room, try and calculate it, follow the steps, get into the funnel, clubbing, set off, GTI, and then deductions. We'll see how this goes. I'll teach you how to solve these questions, but first try on your own. 5 minutes, here we go. Alright, let's discuss this, guys. This is the question on Miss Charlie. She's an American national and she got married to Radhe of India in USA on 2nd March 2021, and she came to India on the first time on 16th of March 2021. She left for US on the 19th September 2021. She returned to India again on 27 March 2022. Lots of going and coming forward, but don't worry, we'll got this. First is the year is 21-22. In this year, whether she is a resident or not, we have to figure out. And she's an individual, so let's ask her the basic condition. 1. Charlie, is your stay in India during the year greater than or equal to 182 days? So she says, I came to India for the first time on 16th March 21, that is last year. So in this year, how many days was she in India? Let's calculate. Was she in India the whole of April? Yes. May? Yes. June? Yes. July? Yes. August? Yes. And September, 90 days, the day she leaves India also? Yes. And then she resumed on 27 March at the end of the year. So in March, straight off, 31 minus 27 plus 1, which is basically nothing but 31 minus 27 plus 1, because I want to take the day she came to India as well. So this is 5. If you total all these days, 30 plus 31 plus 30 plus 31 plus 31 plus 19 plus 5, it is 177 days. And so this answer is no. We try to go to basic condition 2, but we stopped. Is she an Indian citizen or a PIO visiting India? No. Or is she an Indian citizen leaving India for employment? No. So we can go for the second question also. Stay in India greater than or equal to 60 days, and in the last 4 years greater than or equal to 365 days. This first one she is not fulfilling. This first one she is fulfilling, but this one she is not fulfilling because she has come to India for the first time on 16th March 2021, that is last year. Only for about 15-17 days she was in India. So hence this condition is not satisfied. This one is also not satisfied. So she becomes a non-resident. Perfect, guys. Now as a non-resident, only dear income is taxable. So now our job is to only figure out which our income is dear income. While in India, she had purchased a showroom. So basically we have to open up the room of house property, because she has purchased a showroom and was leased out to a company on a rent of 25,000. Blah blah blah. She had received the following cash gift, and she's received some gift from her relatives. So we have to open the room IFOS. Only 2 rooms to be opened, guys. Yes. Let's start solving. She purchased a showroom on 30th April 2021, which was leased to a company at 25,000 on 1st of May 21. That means, guys, not for the whole year, for 11 months. This is the actual rent. What is the expected rent? They have not given it to us. So 25,000 into 11 is the actual rent. So actual rent is 2,75,000. There is no municipality figure standard, so there is no expected rent. From this, guys, is there any unrealized rent? No. Is there any vacancy loss? No, nothing. So this is your GAV. Yes, this is your GAV. There are only 3 deductions. First, municipal tax. Doesn't look like there is any municipal tax, so nothing. So this becomes your NAV. Yes, this also becomes my NAV. From that, 2 deductions, guys. 30%. So 2,75,000 into 30%, which is 82,500. And unlimited interest deduction, guys. Charge interest of 97,500. So 97,500. So if you minus both of this, you get 95,000. This is her income from house property. Yes, this room is locked. It is done and dusted. Next, she received the following gifts from her relatives. From parents of husband, guys. Husband's linear ascendant and descendant are also her relatives. So this one is not taxable because received from relatives. From married sister of husband. Husband's brothers and sisters are also her relatives. So this is also not taxable. But from very close friends, this is taxable because it's more than 50,000. So these two are incomes. Yes, 95 plus 1,72,000, which is basically 2,67,000 is her GTI. Any deductions? TTA, nothing. TTB, nothing. ATG, nothing. So this also becomes her total income. Now, guys, they don't get higher basic exemption limit. Her basic exemption limit is only 2,50,000. So up to 2,50,000, 0. But from 2,50,000 to 2,67,000 on 17,000 at 5% is 850 rupees tax. But can't she get rebate? No, she's a non-resident, so no rebate. On 850, she has to pay cess also. So that is 884 rounded off to 880. That is her tax liability. Would her residential status undergo any change, assuming she is a person of Indian origin and her total income from Indian sources is 18 lakhs? Guys, what a question. Remember amendment? Amendment applies only when you are rich. That means you have Indian income more than 15 lakhs. So is she the case of more than 15 lakh? Yes. And is she an Indian citizen or a PIO visiting India having Indian income of more than 15 lakh? Yes. Then you got to check the second basic condition. Replace 60 days by 120 days, and if that is fulfilled, only then she's a RNOR. Let's check. Stay in India during the year greater than or equal to 120 days. Yes. But in the last 4 years greater than or equal to 365. No. So this is not fulfilled. So her status is still the same, non-resident. So this is a question, guys. Here you have to first talk about a residential state, 177 days. So she's a non-resident. Then calculate a tax liability, which we got as 880. So this is how you'll have to answer this one. Going to the next question now. But while we read this, we don't have too much time to solve this entire question. So we'll take a very easy question now. Here we go. Very simple. Balamurugan. Guys, you all get about 3-4 minutes to do this, and then we get 3-4 minutes to discuss it, and then we wrap it up. So very quickly, guys, total income, tax liability, and whether he is subject to pay some advance tax. Over to you all, please. Alright guys, let's discuss this together. So the moment you get a question like this, you got to open up rooms. Income from textile business. So 1, 2, 3, 4, 5. This is normal business which has a loss of 1,35,000. Income from house property. This is a loss from house property of 15,000. Lottery winning is 5 lakh. No one can touch it. So I'm going to tax it. I'm putting in a box 5 lakh. Speculation business income. So this is another income which is 1 lakh in PGBP. This is speculation business, but this is not unique blood because it's not a loss. Income by way of salary computed is 60,000. And last, long-term capital gain is 70,000. Any long-term capital gain is taxed at 20% and this is taxed at, so these are two, because I have to calculate tax liability also, these are specific rates of tax. Alright, so let's solve this sum guys. Now first we have to address the losses. Can I minus 15,000 from this? Yes, I can minus 15,000 from salaries. So salaries becomes 45,000. Yes. So I'm just writing here taxability. Salaries 45,000. House property goes away. 1,35,000 can be minus from 1 lakh. Yes. And what about the balance 35,000? The balance 35,000 loss will be carried forward for the next 8 years. Then there is long-term capital gain. Sorry, my bad. So 35,000 can be set off here. Set off 35,000 can be 1 lakh can be set off. 35,000 can be set off here because as PGVP, I'm semi-friendly. I can go to any head except salary. So I'm minusing 35. So what remains is 35,000 long-term capital gain at 20%. So is this also over? Yes, this is also over. This is also over. So salary is 45,000. Long-term capital gain is 35,000 and my casual income is 5 lakh. So this is my total income 5,80,000. So that's your first answer. The first thing was calculate his total income. His total income is 5,80,000. If you're okay with this, then I want to go to the next step and calculate his tax liability. Let's see what his tax liability is. First on 5,80,000, on the 5 lakh casual income, you will have to pay 30% tax. So on 5 lakh into 30% is 1,50,000. So 1,50,000 is my tax liability for sure. And on remaining 80,000, on both of these remaining 80,000, can I use my basic exemption limit? Yes. If you were a non-resident, then I could not for long-term capital gain, but right now, so I'm just trying to explain how you do this. 5,80,000. You split between 1, 2, 3, 4 categories. Normal rates, 20%, 15% and 10%. 20% is 35,000. Casual income outside I'm keeping it 5 lakhs and the remaining is 45,000 which is normal. So 5 lakh on that is 1,50,000. And the remaining 45 and 35, can I minus it against my basic exemption limit? Yes. So there is no taxability on that. No. So this is my tax liability 1,50,000. No surcharge. Only cess 1,50,000 into 104% is 1,56,000. This is my tax liability. But guys, if you remember a section called 194B, TDS would have been deducted on this 5 lakh at 30%. So on 1,56,000, TDS would already have been deducted. Can I take the credit? Yes, you can. So remaining balance is 6,000, and since this is not more than 10,000, I will not have any advance tax obligations. So total income 5,80,000, tax liability 6,000, and because it is up to 10,000, it is no advance tax obligations. We'll come back in the next session, look at amendments and also look at more questions like this. If you have any queries, keep them ready. We can also discuss the same in the next session. Thank you so much. I'll be back for more on this. If you understood this question, otherwise I'm here for the next 2.5 minutes to address any questions on this as well. Thank you.